Welcome to the Startup Leader Show, where we learn lessons from startup founders and executives. I am your host, Lisa Dreher, and I'm really excited to introduce our guest for today, Koen Geurts. He is an investment manager at HTGF, known as the High Tech Gründer Fund. And I'm really excited to have you here, Koen. Thank you for making time.
You're welcome. Happy to be here.
Absolutely. Maybe you can start by giving us a little bit of background on yourself and HTGF.
Yeah, very good. I'm originally from the Netherlands. That's why I have this complicated first and second name. I've been working in the space industry for over 15 years in different domains, in particular missions, outer space. So I've worked initially as an engineer, as a system and operations engineer on ESA's Rosetta mission, which was going out to the comet in 2014. And after that very exciting mission, continued my path in the space industry, working in the domain of human space flight. Later on at Telespazio, it's such a large European group, quarter in Italy as a manager of a line of business in Germany, with engineers and operators in all different domains of satellite engineering. So I've been very much involved in institutional space domains, but in the last years in my role there, I got more and more exposed to the new space companies, in particular in Europe, but some of them also outside. And that made me very, very excited about what is happening. Earlier this year, I had the opportunity to change my position basically and move on to work for the High Tech Gründer Fund, which is a very large German VC. We're actually the most active German VC in the deep tech domain. We do well over 40 investments per year. We have three, let's say, focus areas. One is the life sciences domain. Another one is the digital tech domain. And then we have what we call industrial tech. That is the team where I am also working. And we're looking at anything from deep tech to climate tech to space tech, for example. We have just, closed at the beginning of this year of about 500 million, of which we're investing. So we're also very well equipped, and we have at the very beginning bond life cycle. So we have a lot of opportunity, actively looking for good investment opportunities. We're a pre-seed, seed stage investor, so we look for very early startups with a focus on Germany and Europe. Not theoretically, we're not limited, but that is basically where we often see our most of our activity. And then we do investments up to maximum 1 million euro in the first round, which we then can build up in successive investment rounds.
Wow, amazing. That's a great overview. What is the kind of main investment strategy for HTGF?
So limiting it to, let's say, my area or my team, so the more the industrial and deep tech domain, the space tech domain, we have we're a very patient investor. So we look for startups that are building obviously very innovative and new tech, which typically involves hardware. It's a domain that not all investors are equally comfortable with, but we have a very long background doing these kind of investments, and that's also where we often find ourselves engaging with the startups. So our strategy is really to invest into high potential startups that are really looking at groundbreaking technologies. Sometimes it even will take them many years before they actually get really an operational hardware in place and be able to generate revenues. But we have that, let's say, capability and also the internal expertise to work together with them to understand their business and to help them build that up. That's also the reason why, for example, somebody like myself with 15 years of experience in the space industry has joined the team, because we really need to understand the mechanisms of the specific industries. And my colleagues, we have about 15 investment managers in my team looking at different domains. They have similar industrial backgrounds, so that we can help the startups the best way possible, besides, of course, financing them.
Right. Have things changed dramatically over the, I don't know, last 12 to 18 months. It seems like the markets have changed a little bit. And where are you seeing some of the most activity?
Let's say the markets have definitely changed. I mean, unfortunately, we had quite a few crises in the period that you mentioned, and that has, of course, interest rate has gone up, and as everybody is probably aware, also VC money is a bit more tight. There are a lot of funds that are still raising themselves, have challenges in raising their own funds. So this is, of course, a mandatory condition before they can invest themselves. And basically, what has that caused? I think that investors have become more selective, more critical of where they put their money. It's, of course, a very sentimental part of the business, but it's essential because in let's say more of a hyped period, then of course it's easier to raise money than in times like now. So what has changed is that both for startups that are starting now with their fundraising, but also our portfolio companies that, for example, need to secure follow-on financing and go for a Series A or Series B, that it has become more challenging. Nevertheless, the good concepts with solid business models and strong technologies, in my view, still manage to find sufficient money to basically get started.
Right. What have you seen as some of the most successful fundraising strategies that tech and space startups have been using to try to raise funds recently?
Yeah, interesting question. Let's say we're not a space specialized fund, so we invest very broad. And for that reason, space is a topic that is still a bit perhaps exotic for us, but I think that is valid for many other VCs. So except a few exceptions that are really highly specialized on space startups, it is for more generalist VCs. It is quite a niche topic, and that's very important for founders to know, because basically means that you need to basically educate as well your investors. You cannot expect that they understand the market, the potential of the space industry. Still, even today, not everybody is fully aware, I think, of all the technologies, all the services on Earth that we're using, how much they depend on space. So that is very key, that this level of education is done. It's less obvious than tech, where I think investors are very clear on what the trends are and what is needed there. So I think that is, in my view, a key point, that the founders that I've seen that have been very strong really have the ability to also put this in perspective, so that also for, let's say, non-expert investors of the space domain, what is the topic, why is it relevant, why is it a future-proof technology that you're working on. That, on the other hand, so that needs to be explained with a very strong and, of course, but at the same time, the founders need to provide also a concrete use case. So how are they going to get there with concrete steps? Because if you remain too generic, too high level, especially I think in the space domain, it is very difficult to really get into a good discussion with investors. So they need to find this balance between a compelling high-level vision, explaining why that is relevant, but also with concrete steps, how they're going to get there.
Yeah, that makes sense. Is there anything that stands out to you in any recent presentations that you've seen?
There is a lot happening in the propulsion domain, so the in-space propulsion. I personally, I'm very convinced that in, let's say, 10 years from now, there will be a strong commercial LEO economy. We have large players building private space stations. Companies are building better and better concepts of how to create value in space. And what will be, in my view, a key enabler is, say, adequate propulsion technologies. And you see that a lot. There are a lot of startups on the way with different with different propellants, different propulsion techniques. You have, of course, the segmentation, more the low thrust, so typically electric propulsion, the chemical propulsion. I see that a bit as a split between how you have logistics on Earth with, for example, large container ship that go from, let's say, Europe to the US. It's usually more cost effective, but it takes you much more time. If you have, let's say, an urgent delivery, then you take UPS or DHL and it goes by plane. It's more expensive, but it's faster. And I expect something similar to develop for the in-orbit economy. So that is, I'm looking very eagerly into compelling concepts there. And yeah, I think it's just fantastic. It was just yesterday that there was a US company that is developing a nuclear fusion propulsion technology for the future. So even very, very, let's say, hardware heavy and very challenging topics still managed to get some seed funding. I find that very exciting.
Yeah, absolutely. What do you see as some of the major success factors for startups in the tech space?
Let's say in terms of space startups, of course, what is a success factor is basically the value proposition. So it needs to be easy to understand. The business model shouldn't be extremely complex. You have that at times where many things need to fall in place for your business model basically to work, and that creates a lot of dependencies, a lot of risks as well, especially if you are relying then on several other, let's say, startups or let's say very early ecosystems to develop. So if you have a better, let's say, if you can carve out your own business model in a more independent way, I think that is typically stronger or easier. Of course, a good understanding of how to public funds. Talking about the space industry, I mean, I think it's valid for a lot of the tech domains, but in particular in space, of course, there's still a lot of governmental and non-dilutive funding available, and of course, founders that really know how to interact with that, how to get that. That is seen positively. Network. So it's typically also quite a political and very small ecosystem. So if you have a strong network, that helps you. But I think what is let's say, the main criteria is to have a very strong team. That is absolutely critical for your success. And many of the parameters you cannot really influence as a founding team. The market, crises, competition, but what you do influence is the team that you're working with. So that from the start, especially in challenges, I think it's very key to have a very complementary, very strong team from the start, because that's the aspect that investors look into.
Excellent. When you are looking for potential investment opportunities, how are you going about identifying those opportunities, or are they coming to you?
It's a bit a combination of both. So in particular in Germany and Europe being one of the largest, most active VCs, we get, of course, a lot of inbound deal flow. So we, based on the subject, we divide that across the investment managers, and we look into that and basically do the standard screening process. But of course, we go out on the events, pitching days, or online, or ideally in person, and that's also always a very good way to find interesting startups, because then you also immediately get an impression of how the people are. Do you have a connection with them? How do they pitch, etc.
Right. You mentioned that the team is a really important criteria. Are there other criteria that you're looking at when you're considering a potential investment?
Yeah, for sure. Of course, one key topic is the market size. So are you targeting a very, very niche market, very small, or are you targeting a very huge market? And of course, the bigger, the better. And of course, what does the is it a growing market? Is there room for new players, or is it a very competitive market? And basically, you would need to take market share away from existing companies, which is of course more challenging. So we like to big markets and growing markets. That is a bit the external conditions. Of course, we look at internally, like what is the scalability of what you're doing. Of course, with these kind of heavy concepts in the beginning, proof of concepts, building an MVP, it's very project oriented. So you need to do a lot of engineering. But what we look at is that something just for the beginning, and then you can basically, once you have defined your product or your service, can you quickly reproduce it and scale, or will it always require a certain amount of engineering, which is of course not makes it a bit more complex to scale. It doesn't mean that it's not a good investment opportunity, but of course then depending on how that is then assessed and how critical that is, that something we look at. As I said before, the business model, so it needs to be understandable, needs to be sustainable. It sounds obvious, but it's not always the case when you look at this. And as a tech investor, we look at the technology. So is it really unique what you're doing? How defendable is it? So can it be easily copied? How much knowledge and pain has gone into getting where you are? And if somebody wants to copy what you're doing, will they have to go through exactly the same pains and time, or can it be quickly reproduced? Where of course the former is the better case. And how does that give you an advantage over the competition, over what is happening in the market? And then perhaps, obviously from a more financial point of view, let's say we're a VC investor. So at some point we take equity, at some point we need to exit. So we look at what are potential exit channels 5, 6, 10 years from now. How realistic are these? Some products or some kind of business areas are very difficult to exit. And then the general investment conditions. So that is, I would say, that is in a top level, the key parameters we look at.
Excellent. Excellent. Thank you. So if you could make one prediction about the future, what would it be?
Oh, that's a tough one. I'm generally very optimistic. So also my predictions of the future, although we are living in very disturbed time at the moment, I think the world society will get over these crises. Of course, we have big challenges with climate change and everything ahead of us. But I think overall that times will, and that is, I think, also something. Innovation will always be required. That is what I really like about this kind of business. It's not a static topic. So also in 5 years or 10 years from now, we will still need innovation. And although it's more challenging now for founders to perhaps raise money, they can also show it as a credential that if they manage to put up, perhaps in a bit smaller scale, but a solid business, then in the future, in 5 or 10 years from now, it can become a strong business, and they have the capabilities to also navigate more difficult times.
Indeed. If someone wanted to learn more about HTGF, what should they do?
Contact me. Happy to give information. So I don't know if you can put my contact details somewhere, but it was for sure on the LinkedIn post. Otherwise, our website is easier than to pronounce, and our name is just www.htgf.de. So that there's a lot of information there, and also contact details to myself and other colleagues.
Excellent. Excellent. Well, I want to thank you so much for making time to be here today and share your insights. These were incredibly valuable.
Thank you. Very happy to be here.
Absolutely. And I do want to take a moment just to thank GuideForce for hosting these sessions. To learn more about GuideForce, you can visit guideforce.com. And we'll see you next time on the Startup Leaders Show.